of Berkshire's portfolio. Berkshire's portfolio is the funds we have to work with. And we want to own good businesses, and we also want to have plenty of liquidity.
Warren Buffett is one of the most influential investors alive, judging by his outstanding track record. Not surprisingly, his holding company, Berkshire Hathaway Incorporated, BRK.A, receives constant media attention and scrutiny. Berkshire Hathaway's market cap as of August 2023 is $776.26 billion, making it the world's seventh most valuable company by market cap. These are the top 5 stock assets, accounting for almost 80% of Berkshire Hathaway's portfolio in 2023. 1. Apple Inc., AAPL. Apple, the iPhone maker, is Berkshire Hathaway's largest holding by a landslide. As of Q1 2023, the company owns 916 million Apple shares, valued at $161 billion.
What are the businesses? Should I assume it's Apple and the airlines based on what we've seen?
I think that's a good guess.
But $20 billion, is that more than what we have been told based on the 13F filings? I'm just going back.
It's more than showed at December 31st because we spent a lot of money since December 31st.
On what? Is it more Apple, more airlines?
Since we're not buying it now, and it's at a price different than I would buy it now, but we bought a lot more Apple after year-end.
That represents 49.13% of Berkshire's stock portfolio and is about 40 percentage points higher than the company's second largest holding by portfolio weighting, Bank of America, 8.99%. Warren Buffett acquired his first Apple stock in 2016 for $36.3 billion. Since then, he has bought AAPL shares over 13 times and sold on 5 occasions, netting him a remarkable 345% profit. The Oracle of Omaha, alongside his investing lieutenants Ted Weschler and Todd Combs, is a big Apple bull, and he doesn't shy away from hailing the tech giant. At the 2023 Berkshire Hathaway Inc.'s annual meeting in Omaha, Nebraska, billionaire Warren Buffett referred to the tech giant as a better business than any we own.
Apple, has a position with consumers where they're paying, maybe they pay $1,500 or whatever it may be for a phone, and these same people pay $35,000 for having a second car. And if they had to give up a second car or give up their iPhone, they'd give up their second car. I mean, it's an extraordinary.
He emphasized that Apple outclasses every single one of Berkshire Hathaway's subsidiaries. It just happens to be a better business than any we own, he said, adding, Apple is not 35% of Berkshire Hathaway's portfolio, but a significant holding nonetheless, as the iPhone is an extraordinary product. That's a powerful statement from one of the world's wealthiest people, because, come to think of it, Apple isn't the only stock held by Berkshire. It owns sizable stakes in over 65 companies that are household names, including Wells Fargo, Geico, MedPro Group, and more. So, what makes Apple such a compelling investment in the eyes of this legendary investor? During the shareholders meeting, Buffett revealed several factors contributing to his bullish stance on Apple. He touched on everything from its stable cash flow and innovation to its global reach. However, what caught our attention was his emphasis on the intense loyalty Apple enthusiasts have toward the brand. He went as far as joking that Apple fans would rather give up their second car worth $35,000 than part with their $1,500 iPhones. Meanwhile, Buffett described the iPhone as an incredibly valuable utility in a recent interview with CNBC. We'll never own a business that makes so many people happier and is so useful for them, he said. He also praised Apple's leadership, led by CEO Tim Cook, for guiding the company through transitions and challenges while maintaining its profitability and growth. 2. Bank of America, BAC. Bank of America, BAC, is Berkshire Hathaway's second largest holding. With about 1.03 billion shares, Buffett's stake in BAC is valued at $29.6 billion, making up 8.99% of his equity portfolio. The investor holds 13% of the outstanding BAC stock as of August 2023. Buffett made his first BAC trade in 2007. The stake cost him roughly $26.7 billion at the time. As of today, he's made more than 18 BAC transactions, earning him a gain of 11%. Not too shabby. Amid significant turmoil in the banking sector, Buffett acknowledged during Berkshire Hathaway's annual meeting that he needed to figure out the next move in bank stocks. But he insisted he does like one bank, particularly for the long term, and that is Bank of America. We're very cautious about ownership of banks, and we do remain with one bank. I like Bank of America and I like the management, Buffett said at the shareholder gathering, referring to BAC's longtime CEO Brian Moynihan. Moreover, Buffett began divesting his sizable holding of bank stocks in 2020, ditching U.S. Bancorp and the Bank of New York Mellon in the process.
Why'd you keep Bank of America?
Pardon me?
Why did you keep Bank of America?
They invited, I invited myself in many years earlier, and they made a very decent deal for us, and I like Brian Moynihan enormously, and I just don't want to sell it, but I did sell banks that we'd owned for 25 or 30 years, and if they asked me why I did it, I told them, and I like the people.
But he continued to back Bank of America. You might be wondering why Buffett continues clinging to Bank of America when the banking sector is going through crises. For starters, Buffett prioritizes long-term investing. He considers companies with strong and consistent financial performance when researching new stocks. By strong and consistent, I mean stocks that generate solid performance over 5 to 10 years. Bank of America fits that criteria. The bank has consistently generated positive operating leverage over the last decade across various economic scenarios. That means it's demonstrated its ability to grow revenue faster than expenses. Before the pandemic, BAC generated positive operating leverage for 18 consecutive quarters. Then, in 2020 and Q1 2021, it deviated from this trend following heightened expenses and increased reserves for loan losses occasioned by unprecedented circumstances that emerged at the pandemic's onset. But despite a tumultuous operational landscape, the bank has resumed its track record and just completed its 6th consecutive quarter of positive operating leverage in Q4 2022. As someone who prioritizes consistent financial performance and long-term investing, I'm sure Buffett bets on BAC's attention to detail and expense management and its ability to grow revenue faster than expenses. 3. Coca-Cola Company, KO. Berkshire Hathaway makes do with 400 million Coca-Cola shares worth $24 billion. The beverage company accounts for about 7.32% of Berkshire Hathaway's portfolio, third largest holding. Warren Buffett now owns 9.25% of the outstanding Coca-Cola stock. Buffett, who claims to consume at least 5 12-ounce servings of Coke daily, bought his first Coca-Cola shares in 1988. By 1994, he had 100 million shares of KO stock and had yet to sell a single share. Nearly 4 decades later, his stake has rallied 400 million shares and has netted the investor a gain of 83%. That's an impressive return on a $13.2 billion investment. If you are not convinced, this recent stat might surprise you. Coca-Cola paid 4 quarterly dividends amounting to $1.76 per share in 2022. And guess what? Buffett's Berkshire Hathaway earned a staggering $704 million in dividends, a figure that caught the eye of the world's richest person, Elon Musk, who tweeted, "Berkshire Hathaway high on Coke." Coca-Cola is a sparkling investment for long-term investors, offering products from its iconic namesake cola to snacks and sports drinks. Coca-Cola is the world's leading non-alcoholic beverage company. Not surprisingly, KO has provided solid returns and reliable dividends over the years, despite operating in many highly competitive markets. 4. American Express Company, AXP. Berkshire Hathaway's stake in financial services provider American Express is worth around $23.9 billion.
$1.9 billion 8-ounce servings of Coca-Cola products, not Coca-Cola, but Coca-Cola products consumed in the world today. And I don't think you're going to see anything revolutionary, and I think you will see all food and beverage companies.
That represents 7.28% of the company's equity portfolio and is the fourth largest holding. It also accounts for 20.59% of American Express's outstanding stock as of mid-2023. Buffett's foray into AXP investment dates back to 1991, when he first acquired $300 million worth of preferred AXP stock. The pivotal moment came in 1994 when he converted those preferred shares to common stock. This transition netted him a remarkable 64% gain in just 3 years. Today, AXP has earned the investor upwards of 184% gain. American Express is a large Berkshire holding that investors should consider. Why? For one thing, it has superior credit quality. Anyone who knows the banking business quite well will tell you that the number one thing that can severely sink a bank is bad loans. And in the credit card business, the speed at which loan losses surge in times of duress is remarkable. At the end of Q2, American Express had the lowest loss rate of any banking company. Secondly, American Express has a powerful brand. The company's iconic credit cards are arguably the most prestigious on the market. No wonder there are 121.7 million American Express cardholders globally, even with a nearly $700 annual fee. Best of all, American Express has diverse revenue sources. In addition to the net interest income earned on credit card loans, American Express also earns from annual membership fees. Cardholders pay yearly membership fees in exchange for travel rewards, airport lounge access, concierge services, purchase protection, and more. American Express also collects a substantial amount of revenue from corporate services. The company provides corporate payment solutions to businesses, which include expense management tools, travel management services, and corporate cards. Those are just some examples of American Express's revenue sources. There are many more, including interest on outstanding balances, conversion fees, and investment and advisory fees, to name a few. Multiple income streams reduce the company's reliance on any single stream and enhance its financial stability. 5. Chevron Corporation, CVX. Oil and gas giant Chevron is the fifth largest holding in Berkshire Hathaway's stock portfolio. The company's position in CVX currently stands at $19.4 billion. That represents approximately 5.92% of the company's holdings. Warren Buffett owns 6.59% of Chevron's outstanding stock as of August 2023. Worth mentioning is that Chevron is a relatively new holding for Berkshire Hathaway.
We feel pretty safe with Chevron, and very high-grade people, admirable culture, engineering, safety, decency, terribly smart CEO. So naturally we feel good about Chevron.
Buffett first purchased CVX shares at the end of 2020. Nevertheless, the stake has netted him a 26% gain. That's not bad for new business. Besides, CVX was once Berkshire's third largest public equity holding until the first half of 2023. In just 2 years, CVX rose to become Berkshire's third largest holding behind Apple and Bank of America. However, Buffett slashed his CVX stake by 7% in Q4 2022. Then, he dropped a bomb at Berkshire's annual meeting when he disclosed he trimmed his Chevron stake by a whopping 20.8% in Q1 2023. He sold $9.29 million in shares, knocking Chevron down to the fifth position in Berkshire's holding. So what now? Should investors follow suit and sell CVX stock? Or is the oil and gas giant still worth buying? Turns out, Buffett trimming CVX was more of a rebalancing story than a weakening investment. He habitually channels extra profits from his core businesses into other investments. So, possibly the main reason for slashing Chevron is that its position was abnormally large, and reducing it to a more reasonable size made sense. Buffett said at the 2021 shareholders meeting, Chevron is not an evil company in the least, and I have no compunction about owning it. That tells you Warren Buffett still has faith in Chevron and is willing to invest in it. Still, many economists bet big on oil and gas giant Chevron. University of Maryland finance professor David Cass says it is an extremely well-managed international oil company. He highlighted that Chevron's diverse business model, solid finances, and regular dividend increases make it a good choice for those with a diversified portfolio and looking to add an energy name. How to invest in stock assets like Warren Buffett. 1. Focus on value investing. Invest in companies that are undervalued by the market. In other words, look for companies with solid fundamentals, stable earnings, and a competitive edge and buy their stocks at a price lower than their intrinsic value. Do thorough research. Dive deep into a company's financials, competitive advantage, and industry trends before investing. Understanding a company inside out allows you to make informed decisions. Seek a margin of safety. To mitigate risks, find a margin between a stock's intrinsic value and market price. A margin of safety cushions against unforeseen market downturns or errors in valuation. Invest for the long term. Plan to hold investments for years, if not decades. Long-term investing minimizes transaction costs, taxes, and the influence of short-term market fluctuations. Holding stocks over the long term also allows the compounding effect to work in your favor. Never stop learning. Stay updated on economic trends, market dynamics, and new investment opportunities. Adapting to changing circumstances and learning from mistakes is crucial to refine your investment strategy and improve decision-making. And that's a wrap on today's video. If this video sparked any thoughts or questions, I'd love to hear from you. Drop your comments below. I read every single one and always strive to reply to each one of you. If you found this video valuable, please give it a thumbs up, hit that like button, and subscribe for more insightful videos like this. Thanks for watching, and remember to click the link above for our next insightful video.